Okay, it's 8:01. Good morning. This is Vince Lanci, and you are listening to the Opportunistic Traders Gold Fix with myself. Today, we're going to be referencing the weekend uh, gold post that was put up. But let's talk about quickly and saliently about the markets this morning. Okay, the U.S. stock market is stronger, as are global equities across several continents. The Shanghai Composite, um, well, I'm not sure that that's actually relevant right now, but the DAX is up 2%. The stock 600 is up 2%. The FTSE's up. The Dow's up. The Nasdaq is up 1.5, and the S&P, or the mini S&P, is up 1.2%. Getting the tinfoil hat comment out of the way, I guess they all got together over the weekend and figure out how they were going to make the market go higher. But a more realistic, less paranoid statement is this: the market, I think, the proper headline would be the markets are globally reacting to. Doesn't mean that they should be, but the markets are globally reacting in part to the fact that Italian bonds uh, continue recovering. The 10-year yield on October 19th was about 3.7%. And 10 days later, right? What do we Today's the 29th. Um, we're talking about 3.3%. So if there's an excuse, if one were to say that the market is biased to go higher and is looking for an excuse, then um, there it is. Okay, that would be one of my kids teasing me. So, all right, that's not funny. Hold on. Okay, so why don't we just do this so you can get a little bit of a view of my personal life that you don't want. I wish kids got up later. Okay, back to the facts, or our version of the facts. I think one of the drivers would be Merkel is out, Italian bonds are recovering, and that might be some sort of relief globally. That's my first look through at the markets. I don't have the Italian bonds on the screen, but um, uh, I've looked at them off screen, and they seem to be uh, the only reason that I've seen so far this morning for the markets to rally. Now, especially, we talked about in the post, which we'll get to quickly. It's a long post. I don't want to spend too much time on it, but the dollar, the dollar is firmer again, right? DXY is up at 96.50 now, and I'd have to say this is the first day that uh, with the dollar up, gold is down enough to pay attention. And the recovery of, think about this, the recovery of US stocks and global stocks with the dollar stronger, meaning it's not coming from a perception that Powell will ease or Powell will at least back off on tightening. It is coming on sorry, it's a little iced coffee there. It is coming on some perception of global relief. Call it another dead cat bounce if you want. I don't know. But the end of the month is coming. So I think cash flows and short term market behaviors can be managed, which is a way of saying um, manipulated to the benefit for settlements. I think I don't have an opinion about the S&P direction today. I do know that the last week has been painful to active money managers, even more so than those who sold the lows and bought the highs in February. Um, Almost as much as what happened in 2008. Happen to know a couple of them that are down more now than they were in 2000 in February, and one who was profitable in 2008, trading both sides of that market, is just in a perfect storm where things are, very difficult. Not only are the markets moving volatilely, but the sectors are disconnecting. There's macro unity, but there's no sector logic to it. Anyway, to gold. All right, this is the late feed this morning. We'll get to the cash market, right? But here's the hourly gold market, and I have nothing on that in terms of a sell signal. But please note that we are well below that white line, and we'll bring this to the 4 hour. All right. This screen is delayed now. I don't know what happened, but the 4 hour, which has on my clock, right, using my parameters, has an hour and 53, a little less than an hour and 53 minutes left in it, is almost giving a sell signal. And in an hour and 53 minutes, we might actually have to be another 50 cents lower to give the sell signal. Let me see if I actually have one if the market were to settle here. All right. Technically, I do not have one, which says to me that I would want to uh, get another 30-cent downtick uh, in the next hour and 52 minutes, and I will almost definitely get one. And I will look to short this market with a stop at 1232.30 and a possible reversal at that price or above 1235.60. So today we're either going to get a washout or reversal. Now, do we have to have an expanding week of volatility all in one day? No. Uh, could a long term, could a trend that lasts all week start today? Yes. Do I think we're going to have uh, a range expansion week? Yes. Do I think it could happen in the first 3 days? Yes. So uh, it's my feel, uh, and here we are. We're getting what I need. This is what I need. Okay, below 1230, spot 90. Definitely a sale in an hour and 51 minutes. The problem with waiting on a system like this, which is very good, is you will rarely miss, you will rarely uh, get bad signals, but you will miss moves that happen. Let's say we were to drop $5 right now. Of course, we get a signal 2 hours from now, but a lot of the reward is taken out of the market, especially if you're only looking to risk $2. So your risk reward deteriorates as the market gets too far away from the level. But speaking about gold specifically today, all right, so we've got higher stocks, we've got the dollar firmer, and we've got gold reacting negatively. One of the things that I have made special note of, and you'll see it, is in these ovals. It shows up on the hourly, does not show up on the hourly, so it doesn't show up on the hourly on this chart. All right, we'll go back to the 4 hour. Right. If you look, going back a while, but I did the 1, 2, 3, 4, 5. I guess I didn't save the last one I made. But if you look between 12 and 4 a.m., you will see on nearly every day. So you have the 16th, 17th. I have circled in chronological order: 16th, 17th, 18th, 19th, 23rd. And if you look on the 24th, we had the same thing happen in doji fashion. Last night, we did not have it happen. In fact, the hourly would be helpful. Uh, what is it? It refers to the buy order that comes in between 12 and 4, usually between 2 and 3. Last night, market opened a little bit higher. There really was no buyer. There was no buy order, and the market saw an excuse to sell off. So a trader who is watching flow, or who is a person who is in tune with how participants play, if the commercials have a buy order for a customer, uh, they will get out of its way. They will fill it efficiently. They might cover the shorts along the way because commercials are historically short. But what they will look to do is, the day that that buyer doesn't come back is the day that they fish during that time frame. And finding no buyer, they'll push it down. Um, and I don't mean that in an unethical way. They're taking risk. Um, uh, I'll let a judge determine where ethics and legality intersect. But if you find no stops as you're pushing it down in thin volume, you'll cover, or hope that someone else comes in and sells it. Let's remember, commercial banks borrow from the Fed at 2%, and we're borrowing from our credit cards at 20%. So they have staying power that funds do not. And it looks to me like the buyer wasn't there last night, and this is looking bad for the market. All right, let's go to, in fact, there go those wicks that I don't like so much. Let's go to the, oh, that's sweet, right? All right, so there you go. We don't need my personal life any more than that. Okay, here's a story posted last night, also retweeted on Twitter. Goodbye 1235, stock, Swiss dollar, CNI, wait, gold up next week. This is a long post and tries to um, give you some logic behind why gold had been defying gravity, and making some sense, uh, uh, and noting what does not make sense, and trying to handicap how it would resolve itself. We're not going to get too much into that, but if you're interested in understanding dollar pairs that matter to gold, then I would strongly suggest you read the section on not only um, the strong dollar is bearish for gold, but I would put very much emphasis on the section entitled "Trade Wars and a Weaker Yuan Are Bearish Gold," because I got some nice graphs there. One I'm not responsible for. That's Bloomberg and Nomura. The other one I did make, but the gist of that basically is China um, had been weakening their currency to try and offset the trade war aspect, or the tariffs that increased their costs, and that was bearish for gold because weaker yuan. Less dollars can be bought with yuan, which means less gold can be bought with those dollars. But despite a consistent weakening in the last four uh, pegging or reference point sessions, uh, gold had been stronger. And that's reflected in this divergence here that you can see. The orangish line is the offshore yuan price as opposed to the onshore. The offshore is a better reflection of market as opposed to governmental intervention. And you can see that since late 2017, the currency and gold have been tracking each other. In the last, this is a daily chart. The last, however, 15 days, it seems that gold has broken free. And I contend that uh, China, I'm pretty confident of this, that China has been serving two masters for the last 6 months. The master it used to serve was the US dollar. It had to keep the yuan price properly against the US dollar so it could export goods. So the US basically says, we're going to tax your goods coming to us. And China, which had been in the middle of uh, de-dollarizing,
In a
selling its
minute.
dollars for things
Um,
like gold and copper, all of a sudden has a problem because its major customer is no longer buying, at least at the prices that they used to buy. Now, if they devalue the yuan, these new relationships that they're developing and new products like uh, yuan-based oil, uh, they basically want to get off of the. They want to have the yuan be a stronger, more important currency in the world. And the stronger a currency is, and there's negatives to this too, but a currency price is a reflection of a domestic economy. It's kind of like a stock price. for many reasons. And that's not in a vacuum. I'm saying that there's other things that matter: trade deficits, um, current account deficits, things like that. But China is now stuck because they were in the process more aggressively. They'd ramped up their let's get off the dollar, let's get on the yuan. And I think they actually have some IMF backing on that to reduce reserve currency status for the US dollar. And in doing so, make the yuan more important and stand on its own. But if you're a creditor to China and you're not seeing them care much about the dollar, then you're worried about their economy. And so you'd say, well, what are you going to back the yuan with between now and when it becomes a more of a global reserve currency? And they have said, we're de facto backing it with gold. We're putting more gold in it, although they would never admit it. The IMF would certainly never admit it. What you have is you have a situation where China is promising to people that sell it things. So China buys oil and pays. They want to pay in yuan, and the sellers of oil to them. In this case, we'll say the Saudis say, well, we'd rather have dollars. And China says, well, what if we backed our yuan with gold? And the Saudis would say, sure, we'll do that. Now, they may not literally back it, but they will give them an option on it, and they have the gold on hand, and I'm sure that they can say that it's spoken for. The problem with that is if you start pegging your currency to gold, which is what they attempted to do in 2017, 2018, and the dollar and gold diverge. And by that I mean the dollar gets really strong, uh, gold might get really weak. That's going to be bad for your currency, and at the same time, you're not going to be able to sell your goods to the U.S. So they have two masters. They have their old master, the dollar, and their new master, gold. And it looks like they chose the dollar by letting gold float. The question is how it will end. So why don't we get ready? Why don't we just give a uh, couple things? These are the order flow patterns. You can look at that on your own time. All right. So what we have is we have coming into today. All right, the short covering is bullish. They continue to cover shorts on anything that isn't um, extremely negative for gold. So, for example, had we had a weaker dollar today, I think we'd had a nice rally uh, because I think there are still nervous shorts out there. Probably not so nervous this morning. Candlesticks were bearish in the very simple way that I look at it. Okay. The most important indicator that I have, the VBS, on a weekly basis says 1260, 1275 is on the radar. But if you could scroll back up to the top, the initial point is um, on the 4 hour, we're going to have a move. And I think we could be at the beginning of it as we speak. Uh, when I get off of this call, and I encourage you to stay with us for uh, the AM roadmap, Larry Benedict's AM roadmap, which I'll be joining him on. We can discuss uh, not necessarily gold, but I think if you're a gold person and you're looking at other markets, you have to because this gold not exciting every day. I think I think you want to see gold in the context of the analysis given by Larry and myself of other markets, not just FX. All right, so we got the candles. So I think this is key. Although history is not necessarily going to repeat itself. If you look at what gold did running up to the election in 2016, not the day of the election where it had that lunatic spike and sell off, it had what was basically what I would call a bear flag that could end in a gap higher or an orderly move lower. And if you look a little closer, we have that again. Um, uh, but it's not the election yet. So I think there's still a lot of room to the upside on this, which is why I think it's very important. This could be a very good active week for traders in gold. And why don't we go right to the technician? Here we go. Now this is actually I looked at this very briefly. All right. So Michael Moore says if we break, look at the downside part. If we break below, it's 820. We'll be ending this in 3 minutes. If we break below 1228 and back above 1228.30 and back, look for short covering to come in. All right. So my system, right, the VBS algo will basically say get short below 1230 and a half, we'll call it, and we will stop ourselves out in the 1232 and change area. and go higher. He's saying if we go below 1228, we could even go down to 1225. But if we reverse and go back above, get long. So he's seeing, I think, what I'm seeing with different levels, that we could have an outside week here, and there could be some choppiness in the beginning. If the market goes higher, look at the upside part. He's saying again, sell against 1243. I disagree respectfully. Maybe sell against 1243 to take profits, but I'm not so sure the next time up there, if it covers that wick again, uh, uh, that would be an area that would be safe to short from. You could with a tight stop. I think his next area, 1254, is very valid. But I do think above 1243, 1244, stabilized. I think 1260 is on the table, especially as the elections come closer. Um, so why don't we go back to gold itself, right? And take a look at the chart. We'll look at cash because I actually like to do analysis with cash. Continuation charts do have their risks. All right, so there's your currencies. All right, silver's up, palladium's up. What does that tell you? Those are markets. Copper's up. Those are markets that are tracking in an industrial way, not in a precious way. Gold is down. So the question is, if you're watching silver and gold, does silver drag gold up, or does gold end up dragging silver down? Because silver is has aspects of preciousness and has aspects of industrialness. On a good day, it's Goldilocks, and on a bad day, it's the worst of both worlds. So let's look at gold cash and see where we are on the 4 hourly. Add $2 to that, and you'll get your level. All right. So the market has rallied, negating. So we're back in the range. The levels continue to be what they were. Actually, I'll give you an update. Sorry for all the flipping around. If you're wondering why we are not using a screenshot of a computer, my trading computer is sacrosanct. I don't use that for broadcast, and the laptop that I use for broadcast has been corrupted by Fortnite, which is a game that my kids play, and I'm going to um, have a heart attack if they keep playing it on my computer. They downloaded something. So the new levels would be for a move 1239 on the upside, 1231.60 on the downside. If we do not settle this hour below 1230.60. That's it. Have a good day. Pay special attention. It's going to be a busy week for data, and it is the end of the month. I would say to you, uh, I would say this. I would say on your radar today should monitor. If you're looking at gold, you have to monitor equities. See what the Bank of England and Bank of Japan do. U.S. data comes out. China PMI will be very important, and European politics. They have a lot on their plate, and how they react, I think, is very important. All right, so uh, this just out from the Opportunistic Trader chat room. News headline: Merkel says she is not seeking re-election as party chair. Okay, that could be the reason that everything is rallying. I'm not so sure that that's something that I'd wish for, but I guess people are opting for the devil they don't know versus the devil they do know. So I think the politics are getting to her of the problems. So it's going to be her last term as chancellor. And I want to thank Adam Collins for that information, one of our members. And I've got a hop. So the last thing I said was European politics. And lo and behold, there you go. European politics are causing uncertainty. Let's see how the markets react to that. Well, gold's rallying on that. So let's see how that's probably going to, that's uncertainty. So it should probably weaken the euro. All right. All right, let's go with 1 hour. This is important. Okay, so the euro is weakening. All right, so an increase in uncertainty on Merkel's non re-upping her chancellorship. Gold is rallying. Let's see what it does to stocks. I think that should hurt stocks, at least in Europe. So there's your politics right there. That's the beginning of, I think, a political problem in Europe. Who wants to ride the horse that is dealing with Brexit, dealing with Italy, and I got to hop. Have a great day, everyone. Look forward to seeing you or hearing you or speaking with you tomorrow. Cheers. Be careful. Buy high, sell higher, sell low, buy lower.